G'day guys, I haven't done a trade review for a while, so this is a share trade review for you. This is NVIDIA. So what we've got here is the price chart. Down here I've got the commodity channel index, which is our major indicator we use. Down here we've got a multiple indicator which we introduced a few days ago. And up here I've got a couple of back tests. One is the averaging down approach, and this pink one or the purple one is the stop loss strategy. Now, what I want you to notice is a few things here. Number one, you'll notice here we've got the CCI is dropping off, showing a bearish divergence versus the price. The price is making new highs. Now, we did have a dividend declared just a couple of days ago on NVIDIA. It has been doing quite nicely. But you'll notice it's probably about time to, if you're in this trade back here sometime, it's probably about time you exited. Possibly. You can see there we've got a bearish divergence, and our multiple indicator down here is showing a few exit signals early on. So go back here a bit of history. There's a bullish divergence here, and our indicator was showing buy signals, and that would have been nice to go long there. Back here we had a bearish divergence, had a couple of bearish divergences actually, a small one there. The price dropped off slightly, then the price kept going up, then in a major one where the price dropped dramatically. And that seems to be probably replicating recently what we're doing here at the moment. So nothing to notice as well is up here we've got these two back tests. One is the averaging down approach, and the other one is the stop loss approach. And we use a baseline of 100,000 for each one. And you'll notice the stop loss approach is down by about $2,500. The average down approach strategy is up 7,400. So you might say, well, this has been cherry picked. Well, I'm just telling you how this works. I'm not telling you to not use stop losses. I'm just showing you the effects of both. Now you'll notice here, for example, these are both using the same entry approach, entry strategy, and they're both exiting if they gain 3% or more. So in this example, they both entered with the same approach where this indicator broke above the 3, and they both entered, and they both exited with a 3% gain. Likewise here, both entered with that strategy and exited with 3% gain. Another one there. This one here, the stop loss was stop loss with a 3% loss, so it dropped a bit, whereas this one averaged down and it entered another lot here. So averaged down, and the final, there was a bit of a drawdown there, but the final closure was up from where you started from. Whereas this one, you lost a bit there, then you gained, but you're still below that point there. Hence the overall strategy is better on the average down approach if you can afford the drawdowns. So the other thing to notice as well is always when you're trading these, try not to get greedy. You'll notice here, for example, even though the price is declining, both these strategies exited with little gains, with a 3% gain. So in other words, don't get too greedy and try to aim for a long stretch up. Of course, you can have your own exit strategy and your own entry strategy. I'm just giving you some statistics and probabilities how this may work if you used this approach in alignment with the bullish divergence. Likewise, if you're getting a bearish divergence, just be prepared to exit the strategy or to exit the trade with some profits in your pocket. Anyway, to get some more scans of stocks that are showing bullish or bearish divergence, subscribe to the Patreon page where we do weekly scans of such stocks across the regions, including the US, the Europe, the Asian territories, including Australia. And we do some bearish and bullish divergence scans. So subscribe, like and share the channel. Thanks for watching, and see you in a future video.